In times of market volatility, dividend stocks provide a specific type of reassurance. A lot of famous investors like Warren Buffett and Jeremy Grantham have talked about the benefits of owning dividend stocks again and again. Real estate investment trusts are one of the best dividend stocks out there in my opinion. Today, I want to show you my top 4 REITs that pay dividends monthly. To find out more, stick around and smash that like button. First of all, we have AGNC Investment, or simply AGNC, which is a mortgage REIT. Essentially, you have two main types of REITs, equity REITs and mortgage REITs. As the name suggests, mortgage REITs like AGNC invest in mortgages, mortgage-backed securities and other related assets. Their main revenue stream is the interest on their investments. Essentially, AGNC has taken on a massive leverage to be able to pay out one of the highest dividends in the US market, but there's a silver lining to it. AGNC invests in mortgages that are guaranteed by government-sponsored entities, so there is no credit risk there. Even if a mortgage owner defaults, AGNC will get their exposure refunded. So, the only risk that AGNC has is connected to interest rates. Because of the nature of AGNC's borrowing and lending, the company benefits from low short-term interest rates and high long-term interest rates. This is perfect because we're currently heading towards a larger spread between short-term and long-term interest rates in the US, which means that AGNC will very likely benefit. This means a higher stock price and a higher dividend, which is why AGNC is my top REIT pick right now and also my biggest REIT position. AGNC currently trades at just under $16 after hitting almost $19 in September. The dividend yield on AGNC is just under 9%, which is one of the biggest in the US market and, again, is paid monthly. For every share that you own, you'll get a monthly payment of $0.12, so holding AGNC is perfect for anyone who is after an income portfolio. Plus, AGNC just beat analyst earnings expectations by almost 15%, so we can tell that the company is doing better than expected. In fact, there is another mortgage REIT called Annaly Capital Management, or NLY, which is very similar to AGNC and also pays a high dividend of 10% right now, although it's not paying it monthly. However, Annaly Capital is still worth looking into, and I think it's another great purchase as long as you don't expose yourself to it too much. NLY currently trades at about $8.7. Now, the second monthly REIT that I want to cover today is LTC Properties, or just LTC. Unlike AGNC, which is a mortgage REIT, LTC is an equity REIT which specializes in senior housing and skilled nursing homes. They currently have a portfolio of 176 properties with a gross investment value at over $1.67 billion US. They're currently paying a 6.4% dividend, which looks appealing, but there is a potential issue. There is about 14% of uncollected rent, meaning that LTC may have issues maintaining its current dividend. A few of its tenants were problematic, and LTC may be selling some properties as a result. However, the company is performing well otherwise, and they've also declared their dividend for the next 3 months. From the looks of it, there is no upcoming dividend cut, but we need to monitor the situation. Personally, I think it's trading at an okay price and the dividend is good, but I think that anyone thinking about investing in LTC should be wary of some potential issues. I would be careful with my exposure to the company, but I still think that it is one of the best deals out there right now, because it looks like the potential tenant issues have already been priced in at the current price of between $33 and $34. So, the third monthly REIT for today is Realty Income, or just O. Realty Income rents commercial locations to blue-chip clients like Walmart, Walgreens, Starbucks, CVS, Home Depot, and many more. 84% of their properties are rented to retailers, 11.5% are industrial, and they also have some office and agriculture properties. Realty Income has a high credit rating from Moody's and S&P, strong balance sheet, and has shown time and time again that it can pay a reliable monthly dividend. The company has paid 608 consecutive dividends since 1994 and increased the dividend 109 times. Overall, the company is a solid choice, although it offers a slightly lower dividend than the previous REITs at only 3.8%. Still, Realty Income can also offer good price appreciation and, most importantly, stability. Realty Income currently trades at roughly $74 and is one of the most highly regarded REITs on Wall Street. Finally, the fourth monthly REIT on my radar is STAG Industrial, or just STAG. Now, unlike the other REITs that I've covered so far, STAG actually pay a much smaller dividend at only 3.3%. However, that's simply because the stock has gone up 41% so far this year. STAG is an industrial REIT with a history of increasing monthly dividends. They operate more than 500 individual assets that comprise over 100 million square feet that they rent out to single tenants, meaning there's only one occupier per asset. Some of their biggest tenants include Amazon, FedEx, American Tire Distributions, Ford Motor Company, and more. In my opinion, STAG is a solid all-rounder which can offer an increasing monthly dividend combined with an increasing stock price. The stock currently trades for between $44 and $45. So, these are my top 4 monthly REITs with an additional mortgage rate in between. What do you think? Which one is your favorite? Let me know in the comments below. If this is your first time here, please leave a like, comment and share the video to share the love. It really helps the channel. Thanks for watching and I'll talk to you again soon.